Hi folks, welcome to today's Bobcast. I'm Bob Binney.
I'm Jessie Thompson.
And we're both certified financial planner professionals right here in Lincoln, Nebraska with Bob Binney Wealth Management.
Yep. Today's Bobcast is, are you in a target fund in your 401k?
A target fund?
A target fund. Target funds are becoming super common. I was reading this morning that about 30 to 40% of 401k participants are invested in target funds at this point. And that's expected to continue to grow because target funds are relatively new and they're becoming the funds that you automatically get put in if you don't choose something else in your 401k.
And it seems like it makes sense because a target fund will be like, let's call it Vanguard. The Vanguard 2040 or 2035 or 2030 target fund.
And they have all these different companies have different ones, so we can't just pick on the Vanguard one.
But they're all very similar in that they'll have a number in there and it'll be a year, usually with a 5 or a 0 at the end of it. And the idea is that you pick the fund with the year closest to when you're going to retire in it, so that then it will adjust itself as it goes to fit your age and your retirement date.
And what they're really what they end up adjusting it to is kind of like a 60-40 stock and bond portfolio by the time that you retire. Is kind of how it's working. But in that fund, there are different funds. So it's kind of like if you had picked different funds in your 401k and then bundled them together under one name. That's kind of what the target fund is, basically. So basically, when you're in a target fund, they're kind of picking the underlying asset classes or types that you're in, as far as what percentage of bonds you're in, what percentage of United States equities you're in, what percentage of international equities you're in, small cap, mid cap, all of those kinds of things. They're picking them for you. The problem with that is it's very cookie cutter. It's not taking into account things that are going on in our economy for now. Like, for example, in the last 5 years, the super high inflation that we've had, the way that bonds have performed so poorly because of that high inflation and rising interest rate and things like that. So you're so much better off getting advice from a financial advisor to help you pick the individual funds rather than just going with one of those target funds.
Target funds are based on the allocation that they change it to as the years goes on, are based on your age and based on a thing called modern portfolio theory. That's not so modern. It was, they came up with it in the late 70s. Well, the late 70s, 1970s. That's not so modern. And the idea was that as you get older, like when you're young, you have most of your money in stocks and very little or nothing in bonds. And as you get older, that changes to more bonds and less stocks. Well, that's just it's not right. It's not good. It doesn't work. It particularly doesn't work right now because let's say that you're retiring right now or that you're whatever, 70 or 80 years old, and so you have a lot of your money in bonds. This isn't a good time to have a lot of money in bonds because interest rates are still at historical lows and are more likely to go up than down. And when interest rates go up, market values of bonds go down. It's not a good time to have bonds. We're not fond of bonds right now, and we're certainly not fond of these target funds.
Yep. So if you are in a target fund in your 401k and you're a client of ours, or you're just like, I'm not really sure even how my 401k is invested, that is something that we help you with for no charge. That's just part of you being a client of ours. We'll help you with that. Bring us your options, bring us what you're currently in, and we'll show you kind of the difference.
And if you're a client of ours and you have a friend or a relative that's got a 401k and they need a little help, or you're just watching this and you're not even related to us or whatever, and you need help with allocating your 401k, it's real easy for us to do, and we're glad to help you, because the difference in being invested properly with that large amount of money, or it's eventually going to be a large amount of money, a significant amount of money in your company sponsored retirement plan, the difference between being invested the right way and the wrong way can be huge. So anyway.
Okay. Thank you very much. We hope you guys have a great week. Remember to like and subscribe so that you can see new videos when they come out, and so that other people get shown our content too, or free educational content.
Share this video if you like it with anybody, and certainly if you have any questions for us, you can call our office or email us at bob@bobbenny.com or jesse@bobbenny.com.
Thank you very much.
Have a blessed day.